Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, for our weekly stock market analysis for August the 18th, 2019. Up, up, down, down is the title of this video, as if we were entering in a Nintendo cheat code. Overall, this week's price action across all markets has been back and forth, causing a large amount of turbulence in all U.S. markets, primarily driven by the U.S. Treasury yield curve, which is inverted for the first time since 2007, with the 10-year Treasury rate dipping below the 2-year rate, causing speculation of an impending recession and confirmation that the economy is slowing overall. This was co-signed by our consumer sentiment report this week, which edged just that much lower than anticipated. However, potential relief, as the White House announced that some of the tariffs that have been imposed against China, scheduled to take place additionally in September, would be delayed until December, which caused a slight rally earlier in the week. Despite all of this back and forth action, Friday had a huge rally. However, many believe that the sell-off may continue into this week, as our primary macro indicator of the China and U.S. dialogue continues to walk in place. As with always, we'll jump right into our S&P 500 review, which you have in front of you with our weekly chart. We did see a break in our longer-term trend line for the S&P, and we'll go ahead and just kind of map it out for you right here. We did see a pretty large break downward into the price action, as we did state that we did move away from our point of control. However, we did fail to create a lower low into the bottom part of the week, which is indication of a bullish reversal, as we did see that. However, the auction did reject that and did not close above the 20 moving average, which is a key moving average on the weekly chart. As you can see here in the middle, we did lock right in across the point of control and the 20 moving average, and still ended up closing downward within the week, which is an indication of some, including myself, that we will see some bearish action moving in to next week, as well as heavy volume, which we can see down here, that just in this month alone, we have surpassed all of both June's action as well as July's action. Just in the first 18 days of the year, we saw 1.3 billion shares exchanged versus July at 1.1 and June at 1.3 billion. And additionally, we do see this continued rising wedge pattern, which is a bearish pattern. However, we do anticipate that there should be some type of push and a retest roughly about the 293 level over the next couple of weeks, as well as potentially continuing in a small trading range over the next week, 2 weeks, as we continue to wait for additional minutes from the FOMC. I believe that report is out on Wednesday. So we will be watching for some negative sentiment, and we will continue to focus in on keeping ourselves aware of the macro indicators and the tweet storm from coming out of the White House and the back and forth that's coming from China. Hopefully we do get some resolution to that. We don't necessarily believe that we will continue to come down to this longer term trend line here over the next week, but we do anticipate some type of sideways action, moving into the front side into the middle of the week as we wait for that report. And we'll move on to the Nasdaq. Just like the S&P 500, we do see this rising wedge pattern, which could indicate some type of bearish action as we look forward. We'll kind of map it out for you, just kind of can see what's taking place here. As we look at prices coming down and then coming back up in kind of this flag type format, which is overall a bearish sentiment, but we do see just within this week's action as compared to last week, we do see a little bit of equilibrium between the bulls and the bears, as we did slightly inch out a larger gain. However, we're sandwiched between not only the 20-period moving average as well as the 9-period moving average, which is an indication on the average of a bullish signal. However, we do see that we just closed just above the point of control, which is the largest volume traded over the time period denoted. So there is this balance back and forth between the bulls and the bears, and that's clearly indicated by the chart pattern that we did see. It's called a doji, where there is no clear indication of direction. Now, we do believe the overall sentiment of the market is slightly bearish, so we do have that bias. However, we do feel if there are some opportunities for a bullish opportunity, we do see the $187 amount is a key indicator, which you have here in red, as the opportunity. If we cannot breach that, we do feel that there is an opportunity for us to continue downward and break this past week's low, and this overall trend line, to showcase an opportunity roughly about the $177 amount, where we do have a low volume node. So we will be watching this relatively engaged, as we have seen, just like the S&P 500, a pretty sizable amount of volume over the last few weeks, given an indication that the large institutions are engaged and actively participating. If we see large volumes which are increased week over week in comparison to each other, it's a clear indication that the longer term players are fully on board to identify opportunities. We'll move forward with the IWM. IWM is one of the ones that just did not make it above any key moving average over this past week or so, and we continue to see this kind of trombone type pattern where we are just oscillating back and forth between here and here, and no clear balance. Now, we did see what we call a look below and fail outside of value area, where we did see the auction failed. However, we did still see a 3% down move week over week in the Russell. Now, the Russell is heavily weighted, actually 100% weighted, in regards to U.S. based stocks. So there is some impact that's seen there on the Treasury side, as well as tariffs, more so on the tariffs. And we do want to also denote that there is a leading indicator from the Russell in comparison to the other indices. So this could be an opportunity to step in front and be able to see if there is an opportunity to move above roughly that $150 level, which will be key for us to test this higher level trend line, as well as close to the point of control, as an opportunity to break upward. Now, we don't believe that will take place, but we are slightly bullish on the Russell as we move forward. So I don't want to give a full buy signal to that as we wait for the FOMC meeting minutes to come out during midweek. Now, at the same time, we do see an opportunity for us to potentially reverse back down into the Russell. So our focus throughout this week will be more so on the Russell, as we did see a lower high as well as a lower low, which still shows a bearish sentiment. So we do anticipate some type of potential retest back down to the 145 level over the next 2 weeks or so, as an opportunity to test this low, as we do see a pretty good pattern that we do see on the other indices. We call it an H pattern, where we have some price movement that comes down, up, and then back and tries to retest. On the average, that pattern will push a little bit lower. Now, we did see clearly a rejection of that at the lows of value area low. So we're slightly still bearish. However, we will watch for some opportunities to potentially retest this 150 level, which is the 100 week moving average. So again, this week, back and forth, up and down. We're really watching, and keep your news feeds up. There's a lot of information coming out of the White House, coming back from China. So we do anticipate that to continue on. Hopefully it comes to some resolution sooner than later. As always, we do like to communicate that the market does not like uncertainty. And that's exactly what we have been seeing over the last few weeks. So with that, we'll try to keep this video short for this week. We want to thank all of our new subscribers and all the positive feedback as well as the negative feedback. So if you have some words to share with us, we're always looking to improve. As with always, it is your money and it's under your control. Take care.